The Reserve Bank of India's status quo on key benchmark rate on Friday sent the Nifty 50 past the 21,000 level, making this its new lifetime high. This feat was achieved in just 3 months after the index touched 20,000 for the first time on September 11. Dalal Street now starts the week with a busy economic calendar, which would decide the market trajectory. Among key events, India's November CPI, due on Tuesday, December 12, will be crucial. The RBI governor has predicted the CPI print to be higher for the last month. A Reuters poll expects this to have risen to 5.7% from 4.87% in October due to an uptick in food prices. Retail inflation in the US will also be kept an eye on Tuesday, while the Federal Reserve's monetary policy outcome on Wednesday could be another market-moving event. Later in the week, wholesale inflation in India and the US, the European Central Bank's rate decision, and domestic trade data will be closely monitored. On the global front, the US Federal Reserve is widely anticipated to continue with a pause. Bond markets are pricing a 97.7% chance that the Fed funds rate range will be kept steady at 5.25% to 5.5%. Investors, however, will primarily look for cues on how early the Fed could begin rate cuts in 2024.
In US, the initial jobless claims are currently at 220,000 levels. It makes definitely FOMC to keep the key interest rates at a status quo, and the guidance from FOMC is extremely crucial for the global markets in the near future. But we expect the FOMC to maintain a status quo.
In case of a more than expected hawkish Fed commentary, domestic equities risk facing some weakness after their sharp rally of around 6% in the past 2 weeks. Analysts, however, say that any likely dips should be bought.
What we can see is a continuous support from the domestic institutional investors, and also legion of retail investors have been keep on participating in Indian markets. Definitely, markets are positioned to go up and sustain at the higher levels, and any dip in Indian markets is definitely as a buying opportunity for the investors.
That said, on technical charts, the BSE Sensex and NSE Nifty are looking at resistance levels of 70,350 and 21,100 respectively, above which the next hurdles are at 71,000 and 21,350. In case of a downturn, the benchmark indices could dip to 68,350 and 20,550. Today, on December 11, stock-specific action and global market sentiment will guide Dalal Street trajectory.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She has ambitions of becoming a brand. Business Standard.